All right, so today we're going to be starting here on chapter 17, which is activity-based costing. So we'll be getting into that today. This is going to be a little bit different than some of the stuff that we've seen so far, but not too terribly different. So we'll just pick up here. So hopefully at this point, you've either already watched the lecture video for chapter 17 or attended class or read the chapter, right? You have some kind of foundation on the chapter 17 material. And so with that being kind of our starting point, I'm going to go ahead and start walking us through this assignment. So here on the first question, we're just looking at some basic types of multiple choice questions that you could run into, say, for example, on the exam, on the final. So pretty good question here, because remember, about half your exam is going to be multiple choice. So we're looking at what that might look like. There's also some additional multiple choice questions for you at the end of each chapter, so you can always go back and look at those. But in this case, we'll just get started here and see why each of these is correct. So in the first one, it asks us which costing method assumes all products use overhead costs in the same proportions. And so the key here is this last piece, right? In the same proportions. Because whenever I see that, that tells me that I'm allocating overhead the same way to everything, which indicates that this is going to be dealing with the plant-wide overhead rate method, right? With something like activity-based costing, we recognize that each product can use each activity in varying proportions, right? This product may use 10% of the overall amount, while this product uses 30%, and the next product uses 20%, and so on until we've allocated the full amount. All right, so we realize, like, in that case, everything isn't exactly proportional. But with plant-wide overhead, it certainly is, right? That's the underlying assumption, and we'll see as we walk through this chapter why that may or may not be a good assumption moving forward in this class. So that handles number one. Number two, which of the following would typically not be used in computing a plant-wide overhead rate? Well, in this case, we see something like the number of labor hours, the direct labor dollars, the machine hours, right? All of those are very common things to be used for plant-wide overhead rate. What's not typically used for that is the number of quality inspections. We normally see that more in what we're looking at in this chapter, which is activity-based costing. So that's where we tend to see that piece is with the ABC, or with the activity-based costing. So that is why in this case, we're asking which would not be used for a plant-wide overhead rate, while the one that would be used for activity-based is the one that we're looking for here. And then finally, with activity-based costing, overhead costs are traced to which cost object first. Now, this question surprises me every semester if I put this on the exam. I have a surprising number of people miss this question each semester, and I think it's just because we forget what ABC stands for, right? We get so used to just referring to this as ABC, we forget that that A actually stands for activities. And so whenever you see that, or even if you just look at these answer choices, you'll notice only one of them even starts with an A. So hopefully you can kind of use that link, right, to go, okay, all right, this is activity-based costing. The first thing I've got to do is trace these costs to activities. And so that is indeed the correct answer here. And so with that, we'll go ahead and move on to number two. Now, number two, we're looking at some more terminology type stuff. So the first one here, an activity. This is just anything that we do that would require a cost to be incurred, right? So by doing this, a cost is now necessary, a cost is now generated, right? So anytime I incur welding hours, right, that could be an activity, right? The time my employees spend welding on this project, that would certainly be a task that would cause a cost to be incurred. Anytime we are inspecting something, right, that task, the inspection itself, would cause a cost to be incurred. So this is the idea of an activity. Anything I'm doing that is causing a cost to be incurred. Now, the next thing, a cost object. This is anything to which the cost will be assigned. This is the actual product, right? This is like, say, the bicycle. All right, we welded the frame together. That was an activity, but that activity, that cost relating to that activity will be tied into the cost object, the actual bicycle, right? Or the cost of inspecting that bicycle to make sure the welds will hold and the tires have been put on properly, whatever it is, all of that will be traced to the cost object. Very good. And then finally, the cost pool. This is just a group of costs that have the same activity drivers. And we'll see this more as we move through the chapter. So I'm not going to spend a lot of time here. on it. If you want to just look in the textbook, or if you want to just look through the chapter, that's fine. Just to give yourself kind of a reference point before we continue. But I think we'll see plenty of examples of cost pools as we move through the rest of this chapter. Now, number 3, we're looking at advantages of the plant-wide and departmental overhead rate method. Before I even do this, right before I even look at this, I would just try to tell you there are essentially 3 advantages, and that's really what this is looking at for the plant-wide and departmental overhead rate methods. The first one, of course, these are based on readily available information. So we like that. Because the information for these methods is very easy to obtain, it also makes it very cheap and easy to implement. So those are 2 of our big advantages for these 2 methods, the plant-wide and the departmental overhead rate methods. The third advantage is one that I'm not going to be super heavy on in this course. Is certainly something you want to be aware of, but in managerial accounting, we move away from this idea of GAAP pretty far as compared to the first accounting course where everything we did was pursuant to US GAAP. But this is certainly a major advantage for these 2 in that these 2 methods, so these 2 methods, of course, meaning the plant-wide and departmental overhead rate. So these 2 methods comply with US GAAP. Now you say, why does that matter, right? In managerial accounting, I'm not that concerned with US GAAP. That's what we've said all semester, and that's true, right? That's not changing here. But what this means is now, if I use one of these methods, I do not have to do any corrections to publish my financial statements. So remember, my company, assuming it's a publicly traded company, has to have an annual audit every year. So if that's the case, and I'm doing my internal accounting in a method that is consistent with external accounting, I only have to do one set of books, right? There's no adjustment necessary. There's no change necessary to go from a non-GAAP compliant method to a GAAP compliant method. However, if we use activity-based costing, which is the main focus of this chapter, activity-based costing is not compliant with US GAAP. But we'll find that even though that's the case, even though that means I'm going to have to get pretty savvy toward the end and start making some adjustments and pulling this stuff back out, even though it's going to be a little bit of extra work on the end, the information that I get from using activity-based costing is so powerful that oftentimes it is actually worth doing that. So we have to be careful because we can't accidentally publish our financial statements with information from activity-based costing because it does not comply with US GAAP. We will have to switch it back to a method that is compliant with US GAAP. But that's one of the huge advantages for these more simple methods, the plant-wide and the departmental overhead rate, is that they do comply with US GAAP. Now, in this class, this being an intro class, I'm not going to get super technical with why these 2 methods do comply and why activity-based does not. That is certainly a wonderful discussion to have, and it is more well suited to the next managerial accounting class where that will be discussed in depth, right? Where we really dig into why this happens and the way that this happens. But in this class, just as a first intro, it's not really the point, right? Right now, the point is just realize that plant-wide and departmental do comply with US GAAP, and then that activity-based does not, right? That's the main key here with that third point. Okay, so now that we've got the advantages listed, now we can just look at these and see, well, are these things that we said or are they not, right? So the first thing, are these 2 methods based on readily available information? Yes, they are, right? That's point 1 that we've got down here. So of course that is an advantage, right? I'm not having to do a bunch of digging. I'm not having to set up a bunch of analysis. I've got the information. It's already available. I can use it to inform my decisions. Fantastic. Next, these methods can be used for external financial reporting. Well, that's wrapped up in point 3, right? We said if we use one of these methods, we do not have to do any corrections to publish my financial statements. So our financial statements being published, that is a form of external financial reporting, and that is exactly what we're seeing here. Next, overhead costs are typically too complex to be explained by only one factor. Well, that's going to be a disadvantage for these two, right? That is certainly a true statement. It is very common that our overhead for our company is impacted by a multitude of factors, right? It may just be one, right? If we've got a very simple operation, we've only got one very specific thing, but very commonly, right? By far the more common scenario is where my total overhead may be impacted by 15, 20, 40 variables, right? So if that's happening and I'm only picking one of those to do an allocation, do you see how I might lose some of the specifics? Do you see how I might not get the most accurate cost allocation and how that might be a problem if I'm trying to make really complex product pricing decisions and expansion decisions for my company? It could really lead me to make a bad choice. And that's what we'll see as we walk through this chapter, both in this video and in our in-class discussions if you have me in class. Next, these two methods, they are compliant with US GAAP. Now, I don't like the way number 4 is worded, right? It says these two violate GAAP, right? And that is a disadvantage, except that they don't, right? So the idea is like, it's almost using disadvantage here in number 4 as false, right? This is not true, right? These two methods do not violate GAAP. These two methods comply with US GAAP. Now, I'm not sure why the textbook decided to write this in this way. In my opinion, right, if I was able to change this question, that would say these methods comply with US GAAP, and that would be an advantage, right? But the way the book has written this, you have to go with disadvantage here. And I want to make sure we're very clear on that, right? Sometimes I will put a question like this on the exam. It may have that same wording because that's how it is in the text. So I try to be as consistent as I can with what you've seen before. But if you see something like this, then this is the way you need to respond, right? So be very, very careful. I agree. Number 4 on this one is a little bit wonky, but it's okay, right? You've only got 2 choices and you get 3 attempts. So even if you didn't watch this video, hopefully you would at least get it right on the homework. And then if you were still confused about exactly what was being said, hopefully you can then come talk to me or hop on the video and see how this worked out. Number 5. These two methods are, of course, easy to implement. We've already got the information available. We already have it ready to go. So we simply apply the method. And we'll see the actual application of these methods in just a few questions, right? We're getting there. We just got a lot of groundwork to cover in this one before we actually start seeing numbers. But for right now, this is where we're at. Very good. So I'm going to go ahead and clear off the screen and we'll move on to number 4. So in this case, they're just giving us some more multiple choice questions. So in this case, number 1, what we see is if management wants, so what do they want? They want the most accurate product cost. So which of the following methods should be used? So it shouldn't come as any surprise that in the chapter where our topic is activity-based costing, that is what we're going to be looking for here, right? The reason we're spending all of this time learning about activity-based costing is because it is a superior method to what we've seen up until this point. So that is the reason that we're spending all this time here. So that is, in fact, the most accurate method. And we'll see why that is in just a little bit whenever we start actually plugging in numbers. And we'll see that it's just a little bit more complicated than the plant-wide or departmental overhead rate methods, but it's really not too bad. But the information that I get out of it is so much better. It's so much better. And so that is why we do tend to see companies trying to use activity-based costing if they can. Now, there are some hangups in the real world that make activity-based costing very difficult to actually use. But in class, you're going to be given any information that you need. So you're not going to have to actually do the data analysis or do the regression analysis or do the statistics to figure out what's happening. But certainly in real life, if you go into managerial accounting, all of those things are going to be expectations. All of those things are going to be things that you have to be able to do to do this type of analysis, to give your company this type of information. You will have to have a very solid background in those areas. And so it's certainly something that I enjoy talking about. I enjoy trying to help you understand, but it's not the purpose of this class, right? As I said, if you move into the next course, it certainly may be a more important part in that course. But in here, I'm going to give you anything that you need, right? In here, I'm going to give you anything that you need. Now, number 2. which costing method tends to overstate the cost of high volume products? And this is the key red flag for what is called traditional volume-based costing. Traditional volume-based costing is an issue here because what it does is it calculates one overhead rate and then uses that to just apply blanket to everything. So what ends up happening is if I've got two models, so let's say I've got a basic model and a custom model. If I produce, say, 10,000 units of basic and only 500 units of custom, then I'm going to apply a significantly larger portion of the overall cost from this overhead to the basic model than the custom model, simply because of the ratio in the amounts, right? So 10,000 over 10,500, that would be the ratio that would be applied to basic, whereas 500 over 10,500 would be the ratio that would be applied to custom. So you can see how this would be a problem because basic may not really be using that many specialized processes or techniques or anything at all, whereas custom is likely using a lot of those things. But based on this traditional volume-based costing, I'm assigning the vast majority of that cost specifically to the lesser item, right? That's getting produced in mass, in large quantities. And so this is the huge problem with it, is that it does tend to distort our costs. And the book does a really nice example of this, going through a go-kart example, where they show how in the beginning we use traditional volume-based costing, and it almost leads us to make a decision that would have actually very likely bankrupted the company. Because of the way that the costs actually turn out in the end whenever we do a more complex analysis with activity-based costing. So very interesting here, very interesting. And it's a key red flag to know that we're dealing with traditional volume-based costing whenever we're dealing with the high volume products. And also, if you want to just link it, right, we've got high volume and you've got volume-based costing. So it shouldn't be surprising that volume-based costing is the one that assigns cost based on volume. Now, one of the biggest disadvantages to activity-based costing, so read carefully, right? This is a disadvantage that they're asking for, not an advantage, but a disadvantage of activity-based costing. So let's see here, not acceptable under US GAAP. So that is true. So if I was doing this on the test, I would just put a question mark there, right? That one's true. Can be costly to implement. Well, that's also true. So now I'm looking for an answer that's got more than one thing. It can be used in activity-based management. Maybe I'm not sure about that one, so maybe I keep it around. But now I look at this last one and I say, all right, well, what's this last one telling me? All right, I know that activity-based costing, as we said earlier, is not acceptable under US GAAP. So that's good. That tells me that for external reporting, and it can be costly to implement. So even if I don't really understand what this is, it doesn't really matter. Because by just understanding that these two items were true, and then realizing that if I found two true statements, I must have something that pulls them together, I don't even have to know what C means because it doesn't matter. I now look at this and I go, oh, okay. The only one that matters here is letter D, because that I know for sure is true, and that knocks out both A and B. So be careful, right? It's not always on the test, pick the right answer. Sometimes just pick the best answer. Because you would have been absolutely correct to say, well, this is the correct answer. Well, sure it is, but so is this. How do you pick between two correct answers? You find a better answer. And so that's how we do it here. Okay. So if you have any questions on something like that, please let me know. Otherwise, I'm going to go ahead and move on to the next question. And as I say, never, ever hesitate, right, to come by my office, send me an email. I'm always happy to meet with you, try to help you understand this stuff. I really enjoy it. I really enjoyed getting to talk with you about the information. So there's anything I can ever do to help you get this information to gel a little bit more quickly, to make a little bit more sense, then please always feel free to reach out. Right? I never want you to feel like you're being a burden or like I'm going to get upset with you for asking a question. I'm absolutely not. The only way that you'll ever get me upset is by not asking the questions that you need to, right? By sitting there confused and not getting the help that you need, right? So make sure you're getting that help. Make sure you're asking those questions so that you can really get a lot out of this course. Now, next. In this case, we're just looking at some costs and we're trying to group them. Now, this falls under what is called costs of quality. So I'm just going to type this out real quick. We've got some costs of quality in this chapter. The first is what we call good quality, right? Costs of good quality. So these are the costs that we actually would like to be spending our money on, are these costs of good quality. So costs of good quality include two things: prevention and appraisal. Now, a couple of key words here for prevention. The big one, though, is training, right? We're training and improvement, right? If you see either one of those, we're pretty much always talking about prevention, right? So we're trying to train our employees to improve in the process, whatever it is. So before I came into education, I actually worked in public accounting for a period of time. I did several tax seasons as an intern, and then I worked full-time in tax for about a year, and then I worked in audit for just under a year. So I got about 2 years in full-time accounting, and then I had about 3 or 4 years of part-time accounting work while I was still in school. And so the idea here is prevention, right? I'm most familiar with the tax arena, so I'll kind of walk through that. The idea is, like, on the first day that you show up to work in tax, they don't just tell you, hey, go do a tax return, right? You don't know anything about how to do the tax return. You don't know what the software is that the company uses. You don't know how to bill time. You don't know anything. So there's got to be at least some training where they kind of walk you through and say, look, here's how we keep up with our time cards. Here's how we bill clients. Here's how we denote what we did. Here's how we ask questions. Here's how we list what we still need or what we've already gotten. Right? All of this stuff is training, right? All this stuff where I tell you, all right, whenever you see a W-2, here's the information that you need off of it, and here's where it goes in the tax return. That is all training, right? All of that has to be done. And the better job we do at training you, the less mistakes you will make. And the less mistakes you make because of good training means the less review we need in appraisal. So appraisal tends to be looked at as, this is the cost of review or inspection to ensure product meets expectations. So here's the deal. If I take a little bit of extra time and I actually train you really, really well, right? Maybe I have you shadow someone for a week or two. Maybe you ask a ton of questions, you take really good notes, you got this nice article that the company's already put together for you that kind of walks you through how the software works and shows you where stuff goes and how to record it in your calculator tape or in your Excel spreadsheet that you're using along with the tax return, whatever it is, right? Once we've built that process for you, once you've understood exactly how this works, then I don't need to review as well. I can review a little bit more quickly, in other words, which is going to save me time. Because on the prevention level, right, I'm training a new employee. Well, that new employee is not billing at the same rate as the person who's doing the review. The person who's doing the review might have been there 3, 4, 5 years, whereas the person preparing the return might have only been there for a few days or a few months, right? And so, of course, the person who's been there longer is billing at a higher rate. The more time they have to put into the return, the higher the cost of doing the actual return. So what we find is that if we have a really good prevention method, a really good training process in place, then we can review more quickly, which will save us time and save us cost. And it also leads to a better return for the client because now they're getting a more accurately prepared return from the very beginning. So prevention, very first thing, it feels costly at the time. You say, man, this is really costing me a lot to spend all this time in training my employees. Sure, it is, right? I'm not saying it's free, but the cost of that is so much less than the cost that we're about to see as we continue to go down the list. So prevention is by far the cheapest, followed next by appraisal. Appraisal is a little bit more expensive than prevention, but it is still less expensive than anything else that we will see down below. So these are the costs of good quality, right? And they tend to go hand in hand, right? In the opposite direction. So if you spend more cost on prevention, you'll typically need less cost on appraisal. Because if you did a better job at the beginning, you need less review. If you want to skimp out on prevention and on training your employees, that's fine, right? That'll go down. But then that review process has to go way up, right? You got to have much tighter reviews because now the preparation is not as good as it could be. So this is the idea. So those are costs of good quality. Our next area is costs of poor quality. So costs of poor quality include two main things. The first is internal failure. The second is external failure. So internal failure, this is when we discover a defective product before selling it to the client. So before selling the defective product to the client, we catch it, right? But the product is done, right? The product is done. We just happen to find it before we sent it to the client. So for example, we come in, let's say I'm the staff. So I have prepared this tax return. I thought I did a great job. I sent it to the senior or the manager to review. They looked at it. They said, hey, this thing looks good. And they sent it on to the partner. The partner's scanning through that return and they look and they go, what on earth were you two looking at? This return is absolutely terrible. There are countless flaws in this. It's not correct. It has to go back through the process. All right, boom, internal failure. Product is done. We've already eaten up perhaps the entire budget. We may be over budget or slightly under budget, but we're right there on the cusp already. And now we've got to go back and rework the entire return. So keywords here that we're looking for whenever we're talking about internal failure. A couple of keys that we want to look for. One, rework, right? We just said we have to rework that tax return. It's wrong, right? We've got to redo it. So we have to rework. We have, anytime we see scrap, that tends to be an indication of internal failure. If we have to work overtime in the textbook, the textbook considers overtime as an internal failure. Like we should have been able to get this done during regular working hours, but because we made mistakes, because we messed up, now we have to stay late. That's how the textbook views overtime. Now, you don't have to tell me that that's not always an accurate assessment. I'm well aware, right? In public accounting, particularly January to April and then September to October, is not unusual to work a significant amount of overtime because of the significant workload that is applied in that period of time. It's not an indication of failure necessarily. It's just an indication of it's a busy time. But in the textbook, when you see overtime, you assume internal failure, right? That's the link that we need to know. And then, of course, this is actually also inspection of any reworked products. So you'll remember earlier we said inspection was actually part of appraisal. But the key here is this is not a regular inspection. This is an inspection of a product that has had to be reworked. That is why this falls under internal failure. And so hopefully that makes sense. So those are kind of our keywords. If I see any of these things, I immediately jump to internal failure. Now, that's bad. Right? Don't get me wrong, right? This failing at the internal level is hugely expensive, right? We've already blown the budget. Now we're going to double or triple up on the budget, right? It's a big time cost. We do not like it. But I would much prefer internal failure to external failure. External failure occurs. This is the cost that occurs after a defective product has been delivered to the customer. So this is a huge problem, right? This is the absolute most expensive cost of quality that we have, external failure. And the reason it's so expensive is that one, right, I've messed up my customer. So if this is a tax return, if we just continue down this line, the partner signed off on a bad tax return. If that happens, we now have filed an incorrect tax return with the IRS. The IRS will look at the tax return, realize it's not correct, and send a pretty strongly worded letter back to our customer about what they have done wrong on their tax return. They will then come to us and be pretty upset that they just paid us however much money to prepare their tax return and we did not do it correctly. Right? This is a problem. Now, not only do I have an upset customer, but now I have the IRS on this upset customer, and the odds of that customer ever using me again, pretty low, right? Now you think, well, okay, we just lost future sales to that customer. That's a problem. And yes, it is. But what else is likely to happen, particularly in today's world where we have social media and we have the ability to quickly update people on what's happening? It's very likely that this customer could go out, post something on Facebook, Twitter, Instagram, wherever, and now they start telling people about this terrible job that we've done. Well, very quickly, we can go from losing future sales to one customer to many customers, right? Just from making this mistake. So external failure can be incredibly, incredibly expensive, because not only do I risk losing the future sales to one customer, but I now may lose future sales to many customers, right? And if someone asks you, hey, who do you recommend to prepare your tax return? You may not even recommend anybody, but you'll probably say, well, I'll tell you who I won't go to, and that would be da 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 da, right? Because they really did a bad job last time I had them do da da da, right? And so you see how this becomes a problem. So this is the issue with external failure. Now, obviously, this is an issue, right? Even with something like a tax return, but you can see this much more clearly, I think, in a physical example, like a car manufacturer, right? If you have a car manufacturer and they have an external failure, right, this can result in people getting killed or maimed or seriously injured, right? So you produce a car and you forget to put the airbags in. Someone then drives off the lot and gets in a wreck, no airbags deploy, and they get killed, right? External failure, incredibly expensive, right? Because now, not only have you hurt your customer, or in this case, perhaps even killed your customer, right? Now, you not only have to live with that, but now you've got to pay for any lawsuits that come up out of that, anything that comes out from the family, the damage to your company's reputation. I mean, the losses from that can be catastrophic. It can actually put you under very, very quickly. So external failure is by far the most expensive. This also includes any costs from things like repairs on warranties or recall expenses. And so anything in that arena, we're looking at external failure. So now let's hop into the question. So now we just identify, well, which bucket do each one of these costs fall into? Since we spent a fair bit of time kind of walking through that, I'm just going to run through these pretty quickly. So inspecting raw materials, that's of course prevention. Training workers and quality techniques, we see that keyword training, we say that's prevention. So there we go. Collecting data on a manufacturing process, that's a review process, that is an appraisal issue. Overtime labor to rework products. So we actually have two massive keys to us in this one. The first being overtime, the second being rework. And of course, we notice that we have both rework and overtime here. So however you wanted to get that one, I don't really care. I don't have a preference, but you really had a double hint in that one. Cost of additional materials to rework a product. Once again, internal failure. So both of these are internal failure. Inspecting finished goods inventory. Inspecting being the key here. That's of course appraisal. Scrapping defective goods. All right, we see that keyword once again, scrap. So scrapping, that is another internal failure issue. And then lost sales due to customer dissatisfaction. This is of course external failure, as we talked about in our example. So with all that done, we are now ready to move on to the next problem. Now, for this next problem, we're just going to be looking at a couple of different activities. So it should not be a surprise that in the chapter called activity-based costing, we will actually have different levels of activities. So in this case, I'm just going to pop over here. We're just going to write up just a little bit about each one, not too much, but these will be called our activity levels. The first is what is called unit level activity. So unit level activity, this is performed on each individual unit. So performed on each individual unit is how we identify a unit level activity. Number two, this will be a batch level activity. These are performed on each batch or group of units. Our next issue is product level activities. So a product level activity is performed for each product line. So not necessarily each unit, not necessarily each time I produce a batch, but just once for the entire product line. And then our fourth area is called facility level. And this, of course, is used to sustain facility operations overall. So the idea here is we're just going to look at these and try to figure out which bucket do these really fall into. Now, the book's got a pretty good graphic on one of the pages. I can't recall the page exactly, but it's a pretty big chart. You'll find it fairly quickly if you just flip through the book. And it goes through these and it gives quite a few examples. And there's another table behind that, I believe, that has just a ton of examples of different types of activities, like 4 or 5 for each one of these, right? So certainly feel free to go through that. I'm not going to tell you to memorize that, but certainly just familiarize yourself with it where you're fairly comfortable identifying which bucket those things go into. So the very first thing here, paying real estate taxes on the factory building. That is, of course, a facility level issue because if you don't pay your property taxes, you don't have a facility, right? They will repossess your facility. So that's a problem. Attaching labels, that has to happen to every single shirt because if it doesn't have a label. So that is a unit level activity. The redesign of a bicycle seat, well, once I've redesigned it, I don't need to redesign it for the next bike or the next batch of bikes. That is a product level activity. So another example of this would be, for example, anytime a company comes out with a new product, right? The process of actually developing that new product is product level, but then the actual production of it, not product level, right? We're not redesigning the iPhone 74 every time, right? Or the Android 52 every time. Once we have that model, we just move forward with it, right? We know this is what the iPhone blank is, so now we're just going to mass produce that model. But the process of building out that design, that was a product level issue. Whereas the actual production of that is more like a batch level issue. Now, cleaning the assembly department, right? Cleaning is helping the general operations. So that is generally looked at as a facility level issue. Polishing gold wedding rings. So polishing, very fine activity, is unit level. A while back, my wife and I went to get her wedding ring cleaned, right? We have to get it inspected every couple of months to keep up the insurance on it. And so we took it to get cleaned at this inspection. And they offered to clean my ring as well, which had never been cleaned before. They don't typically offer to clean mine. I don't have any insurance on mine. It's really nothing that special. But I said, sure, that'd be great. And normally it takes them about 5 minutes or so just to clean her ring because they do a really good job, right? They take their time. They really devote a lot of attention to detail to really clean this well. And in about 30 seconds, she comes back with both of our rings. And you can imagine neither one of them was very clean at all because they tried to do this thing that should have been a unit level activity as a batch, right? They tried to throw several rings in there all at once and just kind of blast them around and hope for the best. And that didn't really work, right? Because it's not really a batch level activity. It's a unit level activity. And so when that happens, whenever we misclassify stuff, right, it can lead to some poor outcomes. So in this example, it was just a little bit dirtier ring, right? We just took it somewhere else and had them clean it. But that's the idea, right? So unit to batch. This one tends to mess people up some until I tell them kind of that example. Then people go, oh yeah, okay, that seems more reasonable that would be a unit level thing because it's very fine detail, right? Where we're really trying to get that polished. We're really trying to get that thing clean. So we clean one at a time. Mixing bread dough in a commercial bakery. Right, I'm not going to remix this every time I want to bake a loaf of bread, right? Can you imagine if Baird's or some other massive bread manufacturer just built up a little tiny dough ball and then built one little loaf of bread at a time? Can you imagine how inefficient that would be? Right, so that's not what they do. What they do is they mix up a massive vat or a massive amount of dough, and then they have a machine that whacks that down into individual loaves, and then that gets baked, right? That's how that works. So it's a batch level thing. Once I decide that what I'm producing in this loaf is honey wheat bread, well, that entire batch is going to be one honey wheat loaf after another. The next batch may just be white bread. The next batch may be whole wheat. The next batch may be something else. But whatever it is, it's just coming down the line in batches. Then I'll redo the dough. I'll redo the machine if it's a slightly different size or different dimensions, whatever it is. And then once I have that set, it'll just run through the whole batch until we're ready to do the next batch. And then we'll make some adjustments and run a new batch. So it's certainly a batch level activity. Sampling cookies to determine quality. Batch level, although perhaps this one would be more enjoyable as a unit level activity, right? You say, hey, I'm going to need to test all the cookies, right? That's a unit level thing, right? But oh my gosh, it'd be inefficient, right? Can you imagine Chips Ahoy testing every single one of their cookies? I mean, goodness gracious, not only now do they all have bites taken out of them, but the amount of time that would take, oh my gosh, it would not be possible. So instead, what we might do is we might snag one bag out of every batch or 3 bags out of every batch and just see, hey, did those turn out correctly? And if they did, then we're good to go. We just continue on down the line. But if they don't turn out well, then we know, hey, maybe we need to go look at that batch and see if there's a more widespread issue, right? So this is the idea. Batch level, certainly. Recycling hazardous waste, once again, a batch level thing. I'm not going to recycle hazardous waste every time I produce it, right? If I'm in the middle of a process that produces this continuously, what I'm going to do is I'm going to finish that batch, gather up all the hazardous waste, and then dispose of it properly all at once. And if you actually look at the process for disposing of hazardous waste, it's quite time consuming and quite expensive. You actually have to seal it off in a certain container and then go to a certain area, put it in the ground in a certain other container that has to be sealed. Right? It's very expensive, very time consuming. So we're not going to do that every time I produce a unit. We'll do it in batches, right? So we'll get this whole run of production done, then we'll deal with the hazardous waste at the end. And finally, reducing greenhouse gas emissions. This is a facility level thing because this applies to the entire facility as a whole. So with that, we're now ready to move to number 7. So number 7, very similar to what we saw in the last one on number 6. The only difference is this is a service instead of an actual production example. So you'll notice unit, batch, all that stuff stayed the same. The only thing that changed is product level is now service level. Everything else is the same. So registering patients, of course, each patient must be registered individually. So that's a unit level issue. Cleaning beds, we're going to clean each bed individually. So that's a unit level issue. Stocking exam rooms, this is facility level, right? So this might be something like the MRI machine, right? I'm not buying the MRI machine for each patient, right? Can you even imagine how cost prohibitive that would be? MRI machines cost a tremendous amount of money. So what's going to happen is we're going to buy the MRI machine and then we're going to use that on a bunch of patients, right? But we're not even replacing it with every batch of patients, right? We buy this thing once and hopefully that thing lasts for a long time, right? It's facility sustaining, right? So this is an issue for facility levels. Washing linens, that is certainly a batch level, right? While I clean the beds individually, I wash the sheets in batches. Ordering medical equipment, facility level, once again, very similar to the C item that we looked at. Heating the clinic, facility level, once again. Providing security services, facility level. And then filling prescriptions, of course, unit level. Right? So I don't fill random prescriptions all at once and call it a batch, right? I fill your prescription, then I fill the next patient's prescription, then I fill the next patient's prescription, right? On and down the list, but unit, one at a time, right? That's how we handle that. Very good. Very good. Now, for number 8, I believe this is our first problem that we're going to have with numbers. So let's go ahead and hop in and see that. So the bulk of this video, or at least a large portion of it, was very conceptual, very non-numeric. But here toward the end, we're going to start really digging into some numbers and seeing how this plays out. So here we go. In this case, what we're going to do, we're going to come in and we're going to see what we're asked to do first. So right away, they tell us compute a single plant-wide overhead rate for the year, assuming the company assigns overhead based on 125,000 budgeted direct labor hours. And then number 2, in January of this year, the deluxe model had a certain number of hours and basic had a certain number of hours. Assign the overhead costs. So very first thing that we've got to do is come in here and figure out, well, how much total overhead are we dealing with? So what they've told us, they said, we have identified the following activities, costs, and drivers. So these are my actual costs that we're dealing with. So if we come down, right, these are my actual overhead costs. So 655 plus 930 plus 135 plus 205 plus 330 plus 105. All right, so there's the 2,360,000 that they got here. So that's how they got it. It's just an addition of all these expected costs. These are all overhead items: handling materials, inspecting product, processing POs, paying suppliers, ensuring the factory, and designing packaging, all related to overhead, as we've discussed. And so now that we see that, we've got our total estimated overhead cost, and we'll simply divide by our estimated driver. And in this case, they told us, assuming 125,000 budgeted direct labor hours. The 2,360,000 over 125 is 1,888. So that's our first piece. All right, and you'll notice this is per direct labor hour. So what we had really was we had dollars on top, direct labor hours on bottom. So dollars over direct labor hours. So that's why the units turn out this way. Now, the next thing that they ask us to do is to actually go through and assign the cost. So what they told us was, well, my deluxe model uses 2,500 direct labor hours. My basic uses 6,000. So we come in, we drop in those two pieces of information, and then we pull our rate from the previous section from requirement 1. At this point, it's just a product problem. 2,500 times 1,888 is this. 6,000 times 1,888 is this. And there's the end of number 8. Now, do you see a problem here, though? All right, do you see a problem with what we just did? Okay, we don't have the numbers to actually break this out in this case and identify the quantitative piece of the issue. But what do you think might be true about deluxe versus basic? I think deluxe might be a little bit more resource intensive, but do you see how I'm using the same cost allocation per issue, per direct labor hour? So that because production numbers for deluxe are so much lower, right? Maybe I only produce 100 versus 1,000 of the basic, right? But because the total number of direct labor hours is less, it's getting assigned less cost. Even though what should likely be true is that the plant-wide overhead rate, or that the activity rate for the deluxe model should likely be something like 38, 42, 75, something much higher, while the basic model might be something like 8 or 5 or 3, right? Something much lower. So we would likely see, if we had a better analysis, is that cost shifting back toward the deluxe model to more accurately assign the cost. But in this case, we were asked for the plant-wide overhead rate. So all we can do is come in and do that, right? This is the way that this method works. And this is GAAP compliant, once again, right? It is complying with US GAAP, but you can tell just from our basic discussion, it might not be the most accurate, right? It could lead to me making some pretty poor decisions. Now, for the next one, we're using departmental overhead rates to assess prices. So very, very similar to plant-wide. The only difference is we now break this into departments. So now we've got a component department, a finishing department, and a support department. And they tell us determine departmental overhead rates and compute the overhead cost per unit for each product line. Base our overhead assignment for the components department on machine hours. Use welding hours to assign overhead costs to the finishing department, and assign costs to the support department based on number of POs. So if I was doing this on homework, I would probably just kind of write down on a sheet of paper what my cost drivers are for each one, just so I remember that. But at this point, I'm just going to hop down. So we can see this 1,000,001, the 473.5, and the 236.5. Those will be our numerators for each one of these as we're computing our rate per department. Then they told us for the components department, we're basing this on machine hours for 79.20. For finishing, I believe we were using welding hours. And then, of course, for support, we were using purchase orders. So that is where our denominators come from. Once I pull all that information in, I simply do the division, and this is what I come out to. $126.39 per machine hour, $100.74 per welding hour, and $477.78 per purchase order. Now, at this point, we're trying to allocate the cost between the two models, model 145 and model 212. So what I'm going to have to do is come up and look at my table. So if I need something from model 145, it's in this column. If I need something from model 212, it's in this column. So the first thing that I need is my number of machine hours for model 145 and model 212. So there's 2650 and 5270. So we'll just drop those in. Then we'll come up and we'll look at finishing. And for finishing, we were basing that on welding hours. So 1,000 welding hours for 145, 3,700 for 212. So we'll just bring that on down. And then, of course, we do the same thing for support, where we base that on the POs. Now, when I come in, that gives me total overhead cost of $593,351 for model 145 and $1,117,684 for model 212. I now simply divide by the number of units produced, and that tells me the overhead cost per unit for this situation. So very good. So that's requirement number 1. Now, requirement number 2, they say determine the total cost if the direct labor and materials are blank and blank. So we just pull those two numbers in, add that with what we had from the previous question or the previous page, and that gives us my total cost per unit. Then they tell us if the market price is blank and blank, determine profit or loss per unit. So for the first case, this is 1250 minus 661, that's 589 versus 280 minus 560, which is of course a loss of a little over $280. So very good. So that wraps up number 9. Now, number 10, we'll be looking at here. And whenever we're looking at number 10, what we're looking at is the assigning of overhead costs using the plant-wide rate and the departmental rate method. All right, so in this one, we see that our company produces lamps and home lighting fixtures. Their most popular product is a brushed aluminum desk lamp. The lamp is made from components shaped in the fabricating department and assembled in the assembly department. Information related to, notice the 31,000 desk lamps that they produce annually follows. And so we see that information here. And they give us expected overhead costs and related data for the 2 production departments below. So this is what was expected. So right away, determine the plant-wide overhead rate for Laval using direct labor hours as a base. So our estimated overhead cost, it's just the sum of these two numbers. So 360 plus 445 in my numbers is 805. And then of course our estimated direct labor hours, that's 160 plus 275 is 435. 805 over 435 is $1.85 per direct labor hour. Number 2, determine the total manufacturing cost per unit for the aluminum desk lamp using the plant-wide overhead rate. So what we're going to do is we're going to come back. We're going to take our $1.85 and multiply by the sum of 6,500 direct labor hours and 16,200. So when I do that, I'll just pop down here real quick and we'll see we've got 6,500 plus 16,200 times $1.85, 41,995. That's going to be the overhead that we're actually looking for here. Now, the other numbers, the direct materials, direct labor, all that is just pulled straight from the table. Just pulled straight from the table. So this is the only one you have to actually compute. At that point, you'll simply add this all up. That gives you your total manufacturing cost, also called our total product cost, of course. And then we divide that by our number of units produced, and that gives me a manufacturing cost per unit of $28.32. $28.32. Now, for the next piece, they ask us to compute departmental overhead rates based on machine hours in the fabricating department and direct labor hours in the assembly department. So in this case, what we're going to do is we're going to come back up here. We're going to take my 360,000 for my overhead cost in fabricating, and we're going to divide that by my machine hours of 153. That's what they told us, I believe. Let's see. Machine hours in fabricating, yep. So 360 divided by 153, that's $2.35. And then for assembly, we're going to take that 445 divided by my 275 direct labor hours, and that gives me $1.62. Finally, my direct materials, my direct labor, none of that changed, right? That's 265 is the same, the 182, the 388, all that's the same. So this is my 571. So that's my direct materials plus my direct labor. Now, whenever I come down, though, my overhead allocation is going to be a little bit different. In this case, what we're going to do is we're going to come back. We're going to take that $2.35 we calculated for fabricating, and we're going to multiply that by 14,800. So you say, well, where did that 14,800 come from? Well, here it is, right? This is the machine hours that were used in the fabricating department. So that's what we needed. So 14,800 times 235, that is 34,780. And for assembly, we will take our $1.62, I believe is what we got, $1.62, times our 16,200 direct labor hours for assembly. So that's coming from right here. So once we do that, that's 26,244. Adding these two up is 61,024. And then adding all the way down, 265 plus 571 plus 61 is 896, 824. Dividing that by my units produced gives me a manufacturing cost per unit of just under $29. Very good. Now, for our next problem, we're going to be using activity-based costing to assess prices. This one is going to look like it's just a lot of work, and it's going to look really overwhelming when I scroll down a little bit. But don't let it, right? We're going to walk it through one step at a time. And I think you'll see that it's really not anywhere near as bad or as difficult as it might first look like it's going to be, because we do have a pretty good structure in this case. We have a pretty good structure. So as we come down, don't panic, right? It looks a little bit wonky. It looks like we got a lot going on, but it's not too bad. So all we're going to do here, and they actually filled in a lot of this for us, right? What they did is they came up here, they found all these areas, they took all this information, and they pretty much just dropped it down in here for us. At this point, because of that, all we've got to do is some division. So 422 over 790 is 535. 355 over 77 is 4610, on down the list. So that's where all these numbers come from. At this point, all that's left to do really is we're going to come in, find our model 145 information. So it's right here. Find our model 212 information right here. And truthfully, I would probably take out my phone and take a picture of this table. And then you can just come down here and look at that table and find whatever you need. So for this first row, we're basing this on per batch. So I'd go back to my picture. I'd look for my number of batches. I say, all right, well, we've got 395 for 145 and 395 for 212. So boom, there we go, 395, 395. Next, per machine hour, I'd go back, I'd find my machine hours, I'd drop those in. At this point, we take 535 times 395, here's that. 535 times 395, there's that. 4610 times 2450 is this. 4610 times 5260 is this. And I'm going to do that all the way down, and that's going to give me this column and this column. And then whenever I get done, I'll just add up all the numbers in this column, all the numbers in this column, and that gives me 843 and 1,057. We'll divide this by 2,000, divide that by 4,000. That's the number of units produced for each. And if you want to see that, here it is, our units produced right there, 2,000 and 4,000. And then that gives me my overhead cost per unit, 421.51 and 264.41. Now, for my next requirement, they asked me to determine the total cost. So we've got the overhead piece, but now we need the total cost if direct labor and materials are 220 for 145 and 120 for 212. So we do that. This gets me a total cost of 641.51 and 384.41. They then tell us our market price for 145 is 642.15 and 384.81 for model 212. So it looks like both of these are getting pretty slim profit margins. So are they both still profitable? Yes, I mean, they are, at least in my number example, they are. This is algorithmic, so yours could have a loss or have, one loss, one is profit, anything like that. But I mean, am I thrilled with this analysis, right? If I'm the company, am I just like super excited that I'm generating 64 cents of profit on model 145 and 40 cents on model 212? Probably not, right? Probably not. I'm probably going to start really looking for ways to either increase the price on these, right? So maybe I'm looking around and I realize that what I believe to be the market price isn't actually right. And competitors are selling a very similar product for 30% more than we are, right? Well, if that's the case, I can raise the price to be more competitive at the market, to be more in line with the market, and that would help some. The other thing that we might be able to do is to actually cut the cost. So I start looking around, I start trying to find ways to bring that cost down. So if I can find ways to bring that cost down, then I wouldn't have to increase the price to the consumer because I could be saving money on that end. But I'm going to have to find some way to do something along those lines, because truthfully, with these small profit margins, my company's not going to be very successful for very long if we can't get some more profit in here, right? Because if there's any change in our cost structure, any change, presumably in demand or in supply, we're just not going to be able to absorb it. So we're going to have to figure out a way, if I'm actually running this company, to improve this number right here, right? This is not a good number. We either need this right here, my sales price per unit to go up, or I need my cost per unit to come down, or some combination of the two. And if I could raise my price 15% and I could cut my cost 8%, right, that would be okay, right? Maybe that would be enough for me to feel good about. Or maybe I need to do something else. But those are the ideas, right? Somehow this has to increase for us to feel good about this company going forward. Now, number 12, Smith Company makes furniture. The following data are taken from their production plans for the year. So we have direct labor costs of just under 6 million, hazardous waste disposal of 625, and they tell us some production information here, how much we're going to produce, how many direct labor hours, how much disposal is required, all that kind of stuff. So here in part 1, they ask us to determine the hazardous waste disposal cost per unit for chairs and tables if costs are assigned using a plant-wide overhead rate based on labor hours. Well, in this case, we take my $625,000 in the overhead, which is this hazardous waste disposal, and divided by my direct labor hours. So we come down 252 plus 15.4, that's 267.4, $2.34 per direct labor hour. And now we just look. Well, chairs use 252,000 direct labor hours, and tables only use 15,400. So we're seeing $589,680 worth of overhead cost being assigned to the chairs, with $36,000 being assigned to the tables. Over 207,000 chairs and 16,000 tables comes out to a roughly even split, with actually slightly more on a per unit basis being assigned to the chairs. And you say, well, maybe that seems fair, right? But if we actually look at what's creating the hazardous waste, it's not really the chairs. I mean, sure, they're creating a little bit of the hazardous waste, but they're not creating the majority of the hazardous waste. They're certainly not creating more than 90% of the hazardous waste, or approximately 90% of the hazardous waste. So we realize maybe this isn't the best way to allocate this. Maybe instead, we should be allocating this on the basis of the waste that's actually being disposed of. So if we do that, well, my activity driver is 400 pounds of hazardous waste for chairs and 1,100 for tables. So now all I'm going to do is take that 625, divide that out over 1,500. And whenever I do that, I'll find that my overhead per pound for chairs and tables is $417 roughly. Well, now because I'm assigning so much less in terms of pounds to chairs, what I'm going to find is that I'm now only assigning $167,000 in overhead to chairs, whereas before I was assigning $590,000, which brings my overhead cost per unit on chairs down to 81 cents. This also rockets up my overhead allocation on tables to approximately $29 a piece, far higher than the $2.25 we were allocating before. So do you see how before my cost allocation here was off $27 almost? Do you think that could have led me to make some poor product pricing decisions, right? So maybe I look at this and I go, man, my chairs are really just not making me very much, but my tables, man, they're really generating a nice profit margin on each sale. So maybe what I'm going to do is I'm just going to whack my chair division. I'm just going to build tables, right? I'll have someone else, I'll recommend someone for them, my customers to go get chairs from, but I'm just going to specialize in building tables because tables are where I'm making money. But you can see that's not really true, because if I eliminate my chair division, they're now not even covering up any of the costs that we're having to spend to dispose of the hazardous waste created by the tables. And only at that point, without this analysis, would I realize the mistake that I've made, that I've been way, way under assigning this overhead to the tables. But at that point, I've already sold all the stuff to make my chairs. I've already gotten rid of employees. I've already downsized the company, whatever it is. All right, but at this point, it's very difficult to go backwards. So we need to be able to do this kind of analysis initially so that we see this change. We go, oh, wow, look at this, right? We were assigning over 4 times more, or about 4 times more overhead to our chairs than we should have. And we should have been assigning $26.40 more to my tables, right? Massive change in that allocation. Massive, massive change. So very important that we be able to do this type of analysis. And finally, our last issue in this case, we've got Cardiff and Delp, an architectural firm that provides services for residential construction. Following data pertains to a recent period. Using activity-based costing, compute the firm's activity overhead rates and form activity cost pools if appropriate. Once we've done that, they want us to actually figure out the overhead cost for an individual project that has the following components. So here we go. We've got $272,000 in expected cost for consultation, $125,400 for drawings, $33,600 for square feet, and that's our modeling costs. And you can see all these numbers right here are just getting pulled from this column right here. 176 for supervision, and then billing and collection got lumped together for this company. So this is just the sum of these two. 9,300 plus 5,000. That's 14,300. Our contact hours, 1,700, 2,200, 42,800. All those pull straight in. By far, the number one mistake I will see on the homework, and if I give a question like this on the exam, is people adding the 5 and the 5. But you'll notice for each job I have to bill, for each job I have to collect. So these are the same 5 jobs. So that's just 5 here. So we've kind of got to think about it rationally, right? I'm not billing for 5 jobs and collecting for 5 other jobs, right? This is the same 5 jobs. I billed for 5, I collected for the same 5. So that's why we're not adding those 5 here for the jobs, but we are adding the total dollar amounts, 93 and the 5. So very good. At this point, it's just some division. 272 over 17 is 160. 125, 4 over 22 is 57. And then all we're going to do at this point is assign based on what we were told. So 460 contact hours, 342 for design, 8,400 square feet, 200 days, and then of course it's a job. So it's 1 right there. We now just take this right here, multiply by these numbers here, and that gives us this column. And then we'll simply add this column up, and that gives us right here, this 146,674. So with that, we have officially finished chapter 17. So hopefully this video has helped you make some sense of how activity-based costing works. Of course, we'll see many more examples if you're in my in-class section in class. Otherwise, this will be it. But if you have any questions, once again, please, please, please never, ever hesitate to reach out to me. I'm always happy to meet with you to try to help you understand this information. Send me an email, come by my office anytime. I'll be happy to meet with you to discuss anything course related. So with that, I will see y'all in chapter 18. Good luck on the homework. Good luck studying. Thank you.